What's, what's up, guys? Mighty Trade's back on the scene. It's been a minute, but I'm back with another video. Today, this is me trading. What was this? Yesterday, January 7th, 2025. I caught a nice little trade on Tesla. Nice trade on Tesla using the only method I use, fair value gaps. And as you can see, I saw some plays, some setups on some other tickers, but I didn't play those. This is Coinbase right now. And it was even one on Meta. And these ended up going crazy too, but I already picked Tesla, so I never played these. And this was a quick one today, guys. It was real. I think I was in and out in about like 3 minutes. Like, it was real quick. Made my money, was done for the day. Look, by the time I clicked back to Tesla, it was ready for me to enter. So right now, I'm just checking my higher time frames to see what's going on, to make sure it's a good play before I jump in, you know. But as you can see, I made the fair value gap. 3 strong candles going down on a 5-minute. It's retracing back on the 3rd candle. Sometimes I wouldn't recommend doing this. Usually I'll wait for the candle that I bought. I bought it at this candle, as you can see. I bought right there because I noticed it started getting weak inside the fair value gap. It started getting bought up. You see like how it wicked off. This ended up working out, and you can do this if you see that like it's working. And look, I purchased one contract for $1,010. At the time is there. I don't know. The time is there on the screenshot though. Whatever time I bought it. But as I was saying, usually I'll wait for that green candle that you see. Usually I'll wait till that candle fully forms to create the fair value gap. But it ended up working out. So I wouldn't recommend this all the time unless you completely sure and the fair value gap works out how it's supposed to, because I noticed like I made it and then it went right into it. As soon as I made the fair value gap, it went right into it, but it started getting bought up. Like that little skinny line, that wick, lets me know that it's gonna keep going down. So I enter puts. Puts means it's gonna go down, and as you can see, I just set my profit to loss. Pretty self-explanatory. If the stock goes above that little bit of red I have, then I'm gonna cut the trade. And that's it. It's only a little bit. Usually I'll go like a little higher. I'll put my stop loss like on top of the fair value gap. So like if it goes above the fair value gap, then I'll get out. But since the contract was so expensive, I really didn't want to like put a high stop loss, because if I lost 10%, I'm sorry, give me a second. If the contract lost 10%, then I would already be down 100 and something. So try to keep it short. But it ended up working out. I don't think I saw any loss on this. It was straight profit from the moment I entered, basically. And yeah, right now I'm just checking other tickers. And this is like, yo, it's like, this is something so simple that you think like it's impossible, or no, once you understand, it's literally this simple. This was a 3-minute play, and I made what I used to make at my job basically in a day. As you can see, I put my profit take, which is where the green box is. The end of the bottom of the green box is where I intend for the stock to go, but you know, sometimes if I like the money that I see, I might get out sooner. So yes, right here is just a waiting game. I'm waiting for it to hit, but it's moving. At this point, I'm printing. I'm already printing money. This was yesterday, so I'm doing a voiceover of my play. But yes, I'm printing money, and I'm gonna start talking as I'm trading. I think that would be much better instead of like recording and then like recapping it the next day. So going forward, I'm gonna talk while I'm trading. That'll probably be much easier. But yes, this is very simple. I'm going to use this for the rest of my life. As you can see, you wait for a movement. If you look before I made the fair value gap, there's no real direction. It's like kind of choppy, and it finally broke that choppiness with them 3 big candles that you see, which is why I made the fair value gap. And then once you see that, all you have to do is wait for price to retrace back into the rectangle, and then you enter. For calls or puts, calls, I'll play calls if this direction was in the opposite direction. If it was going up, if I saw 3 strong green candles break out of that consolidation that it had like the last couple days, but it broke below with red candles, so I played puts, and it printed perfectly. And also, when you're buying expensive contracts, you need to be way more mindful of your money. One, they print faster, but you also can lose faster, or like bigger. I mean, say higher amounts. Put it like that. Boom! I sold right there for $200 basically, and that was in like 3 minutes. That probably was like what? Just give me my money. Just give me my money. But yeah, as I was saying, that probably was like maybe about 4 minutes, and on the contract itself, it only was about like I think 23%. Boom, real quick, in and out, 200. And that's, you get better returns on more expensive contracts. If you know what you're doing, do not be afraid to buy expensive contracts. And this is what the stock ended up doing. A couple minutes later, I didn't hold to like the bottom, but I could have made an extra, what is that? I think that's maybe like an extra 150. And then yeah, boom, that was my day right there yesterday. Quick and easy.